this point constantly, the oil and gas veteran analyst with Edelweiss, that the best performance in RIL happens in years when large capex has come to fruition. So I think let's get Jal in right on that note and ask him what he made of the release and the disclosures yesterday. Jal, thanks very much. Good morning. What did you make of it?
Good morning. So, to put things into perspective, while the market has been making, focusing excessively on Reliance Jio, where the debate is whether they'll break even at the net profit level in 5 years' time or not, the fact of the matter is that in its core businesses, which is the sort of petrochemical refinery related, $20 billion of projects are actually seeing fruition, which are in fact very profitable projects, and in fact very quickly that they will start making a lot of money. So as you pointed out, in the last 2 days, they have made two announcements. One is the ethane import project, which has been commissioned, and that was day before yesterday night, and yesterday night the Paraxylene 2 project being commissioned. These are together, in my opinion, a little more than $2 billion worth of projects which have started as yet. The ethane import is larger at $1.5 billion. Now, just to give you an idea of the significant profitability, so the ethane import project, we believe will save Reliance Industries 40% of raw material cost, because they'll be importing it from the U.S. versus Middle East currently. And it'll make an ROC of 18% plus. So these are, and the project has got off beautifully. They've taken delivery of all six. I believe they've taken delivery for all 6 of their dedicated ships. 4 of them have already offloaded the cargo in at the Hedge. 2 of them are on their way to the U.S. to pick up cargo. So it's now already sort of rolling. So pretty quickly they're going to be earning an ROC of 18%, and several other projects. So if you look at the release last night, they say that the mega $5 billion off-gas cracker commercial commissioning also will be announced soon, followed by, at some stage, the petcoke gasification. These are $5 billion projects each. So bottom line is really, while the market is a buzz about Reliance Jio, $20 billion of very profitable projects are being commissioned as we talk.
So how does this all stack up, Jal, according to you, in terms of maybe a target price for RIL, factoring in the capex fruition as well as, say, the numbers, not Q4, but in general?
As you'd recall, about 2-3 months back, we had sharply increased our target price to way highest on the street, which has got breached. Which has got breached very quickly. And what we did last night is hiked our target price further to 1,600, pretty much amongst the highest on the street again. So we've jacked it up by 10% again, because one is that Reliance's free cash flows per share, free cash flows from this year, it's going to turn free cash flow positive, and in our opinion, its free cash flows are going to be in the region of 25,000 crores, just to start with this year. Now, what we've seen is that when Reliance gets into this free cash flow phase, the stock price tends to rise very sharply. So at the cost of reputation, as I mentioned to you all in the past, if you notice, if you go back a long way, you'll see that between 91 to 94, Reliance was a multi-bagger. Then between 94 to 2002, it did nothing. Then again between 2002 to 2007, it was an 8-bagger. And then during the investment phase of these $42 billion of projects between 2008 to pretty much to date, it has done again nothing. But now as these $42 billion of projects come to fruition and its free cash flows turn positive, we see Reliance being a very significant performer.
Is it possible? You're essentially saying that this is a stock which could keep giving at least over the next foreseeable future.
Well, giving or going? I don't know what the right word is.
Going and giving, right?
yeah, I'll leave that one to you.
Okay. But is it possible, Jal, two things actually. Can Jio take away from some of this giving in terms of the capex required there? And two,
yes.
how long before they actually announce another slew of projects on the downstream oil and gas side? Do you think that's at least a couple of years out?
Okay, so to answer your first question, look, Reliance Jio is not so much of a function of how much profits it makes in the near term. You know, our own forecast is it'll take at the net profit level close to 5 years to break even. But Reliance Jio is really a function of a huge negative valuation that the market was giving, saying that this is a disaster, you know, right from 2 years back, saying LTE technology is a complete failure globally, and where are the handsets at a reasonable price, and they don't have the infrastructure, to now all those things, in fact, are fully established. And so that's a function of a valuation re-rating from a hugely negative valuation to, in fact, just a neutral valuation that's driving the stock. And those earnings are really going to start coming, you know, a few years down the line. So that's a value driver. That's not a profit driver today. The profit driver today is basically the oil and gas. I mean the petchem and refining and you know, the ethane import projects, which are $20 billion, and that's core projects, very profitable, 18% ROC, as we explained on the ethane project. So it's basically a profit growth in the near term plus a valuation re-rating. Profit growth is going to drive the core business, and a valuation re-rating on the Reliance Jio business. Sorry, I'd said a second thing. What was your question again, fully?
No, I mean, how far out before they announce another set of projects? I mean,
okay.
capex essentially, yes.
So look, my experience. So firstly, Reliance is, if I'm not mistaken, even today, every page of the annual report says growth is life. Now, when you say that, for growth you need to you invest, right? So I don't think that's going to change in the longer term. However, if you look at Reliance's sort of history for the last 2.5 decades or so, you do have these periods when the fruition of this capex, in this case $42 billion, so $42 billion of projects getting commissioned, is typically much larger than anything new projects that they announce. So you do have a sort of period of perhaps 2 years, 3 years where actually its cash flow is, it has significant free cash flow, and that's when it performs.
Okay. All right.